So a lot of people have no idea that Ethereum actually has a very good chance of dropping all the way down to 1,000 points. That would be another 50% drawdown. Okay, so I know it sounds a little crazy right now, but you got to realize that people thought I was crazy when I said Ethereum could crash to 2,100. People thought I was crazy when I said Doge could crash to 11 cents, and people thought I was crazy when I said that Bitcoin could crash to 32,000. And that's exactly what happened in all those predictions, and that's exactly why I'm your favorite channel when it comes to making these predictions and calls on Bitcoin, Ethereum, Doge, and you name it. Okay, so in this video, I'm actually going to break down to you all the bearish factors that I'm seeing in this chart, and I'm also going to break down to you some of the bullish factors we're seeing. Okay, so understand that this video is not being made to scare you, but simply being made to show you the possibilities and show you what other channels aren't going to show you. We're going to give you the honest and transparent truth here, and we're going to dive into the facts. Okay, so fact number one, you've got two head and shoulders here on this chart that so many people are completely unaware of, which is really, really sad. That's why we have a chart course, so you don't ever fall victim to these institutional patterns and behaviors that are designed to take money away from you. Okay, so starting off with the first head and shoulders, if you haven't noticed it already, which we actually have went over on the channel many times previously, is this head and shoulders right here. So left shoulder here, head right here, right shoulder right here, neckline's going to go right through the support. And what do you notice about this support and this neckline? Okay, well, we actually just rejected perfectly at that neckline. You got two wicks right there, and the price target coming off of this major head and shoulders, guys, is pretty big. Okay, so we'll actually dive into that since this price target goes off the charts. We'll dive into the weekly chart here in just a sec and show you where that price target actually leads us to. But the next thing I'm actually going to point out to you is the second head and shoulders. And you're thinking, Alex, a second head and shoulders? Are you kidding me? How bearish can you get? Now, look, guys, we're just going off the facts and we're just showing you what's on the charts. Second head and shoulders right here, left shoulder, head, and this right shoulder is not perfect whatsoever. As a matter of fact, neither of these head and shoulders are perfect, but whoever said you had to be perfect? Simply put, okay, they're bearish patterns, they're bearish formations, and they are indicating further drop, and that's exactly what we're getting right now. Okay, so based on this head and shoulders, you're expecting a drop down to 1800, and that's exactly where we're on our way to right now. Okay, now very important thing to note is we have never closed below 1800 since this major bear reversal has begun. Right, you can see here, touch 1800, wick up, touch 1800, wick up, touch 1800, wick up, and if we touch 1800 again, we could possibly wick up, and that could lead to a major bullish reversal. Remember, I'm not just going to give you bearish factors. I'm also going to be honest and show you some of the bullish factors as well. Okay, and so if we get another wick up, if we get another bullish reversal at the 1800 level, that could be a really good sign for Ethereum possibly, but don't get too excited because it's too early, and it doesn't mean necessarily that it's about to rocket higher to the moon just because it wicks up at 1800, okay? So this is the bullish factor, and I told you I would show you our bearish and bullish price targets for Ethereum. So this is going to get you excited if you're bullish on Ethereum. The bullish price target would be about 3,200. Now, how do you get this 3,200 price target? I'm going to break it down to you right now on the chart. So a wick up at 1,800 would form a double bottom at 1,800. This is the mid pivot point. And now, look, take the double bottom right here at 1,800. Right, what you have to understand is the double bottom is not confirmed for a breakout higher until you break this mid pivot point. Now the mid pivot point is right here at around 2,300. So basically what you're looking for is a break above this level, okay, before the major move higher is confirmed. Now, how can you be so confident that the exact price target would be around 3,200? That's what I'm going to show you. Okay, so coming in the double bottom, right, let's actually clear up some of these lines right now. So this is going to be a little more clean for you. Basically, you got this first bottom set up to the middle pivot point, okay, boom, back down, and this would form the double bottom. Now, remember, I told you that the double bottom breakout is not confirmed until you break that midline, okay, so once you break out of the double bottom, boom, this is where the breakout is confirmed, is right there, okay, so what you can do is you can measure from the bottom around 1800, take the midpoint to the bottom, and take that out as your price target. and that price target would lead you to around 3,000, 3,200, right around there. Okay, so important thing to notice here is you would be going up against some serious resistance here in the Ichimoku cloud. Now, whether you believe in this indicator, now I know it's not necessarily the most popular indicator, right? So at the end of the day, not many people are going to trust it or believe it, okay? But just factually, you can see, right, when the cloud's green, what do you get? You get support. Cloud's green, you get support. Well, if the cloud's red, you can see that's resistance, right? It doesn't take a genius. You don't even need to know how this indicator works, really, just by looking at it right here, right? You can see green support, breakdown, boom, bear trend has really begun, right? Well, same thing for the red cloud, right? Red is going to be resistance, and, well, it's very unlikely that this price target in this bullish scenario plays out because of that strong resistance, although it is still a possibility, and I told you I'm going to break down both bullish and bearish scenarios, okay? Now, it's much more probable that we get the bearish scenario, so that's what I'm going to get into further on right now. Okay, so remember, we talked about two head and shoulders right here. You got second head and shoulders right there, okay? Now, the third head and shoulders, I'm going to point out, it's not actually within the price, but actually on the RSI. So let's actually zoom out to the weekly chart. And guys, I guarantee you nobody is talking about this on any channel you watch out there, okay, because they're just not nearly as good as us over here at Crash Trading. Okay, so look at this RSI right here. Left shoulder, head, right shoulder. Take the neckline right here, and you're going to get a price target of, take it from the head, bring it down. You're looking at a price target or on the RSI of around 32, 33, 34-ish points. Currently, we're at 49. So what does that tell you? Still have a lot of downside there. Okay, so when you take this head and shoulders in the RSI, when you take the head and shoulders, both head and shoulders actually that we pointed out on the daily, right? And guys, if you thought it couldn't get any more bearish, you're wrong about that, okay? Because you have what a lot of people would call maybe a descending triangle. A lot of people would call it a bear flag. Okay, whatever you want to call it, right? You can say a descending triangle there. You could call it a bear flag there, whatever you want, right? The point is you don't want to draw random shit up on your chart. At the end of the day, this is a bearish formation, right? And so that's what's really most important. It's not whether you call it a triangle or a flag or whatever you want to call it, right? It doesn't matter. It's a bearish formation, and logically speaking, from a formation of this caliber, you're going to get a bearish breakdown potentially, okay? And so measuring the breakdown target, you're looking at, boom, right here, down here from the breakdown, okay? Once again, going off the charts on this price target, okay? So not only do you have a head and shoulders that points to a major breakdown, right? Because remember, you take the head and shoulders price target here, bring that down. Okay, you have a major head and shoulders here. You have a major head and shoulders there. You got a descending triangle or bear flag or whatever people want to call it, right? People got a million names for these patterns, okay? That's why at the end of the day, we don't really focus on these patterns nearly as much. You just have to understand from experience, it's a bearish formation. It's lower highs, lower highs, lower highs, double wick there at the neckline, right? So it's the combination of all these things that make you understand, okay, this is very, very bearish, okay? And so when you combine that fact with the MACD cross, guys, that's what's really giving you a ton of confidence that we're about to reach down 1800. And that's, once again, that pivotal point here where we're going to know, all right, what's really exactly the plan here. Okay, because we do have that potential for a breakout higher once we get to 1800, back up to the 3200 range. But once again, we've went over the fact of the matters. It's highly improbable that this wick is going to lead to such a massive rise. Okay, you just have to be objective and understand you're going against a lot of resistance. You're going against a bear market. It's going to be very hard and much less probable. Okay, so it's just the fact, whether you like it or not. We're going to tell you the truth here, okay? So when you understand, okay, you've got one bullish scenario, which is this double bottom. Then from the double bottom, for it to work, you need to break through that mid-resistance point just to get to 3,200 most likely, right? That's the only bullish scenario you really have right here. But when we went over the bear scenario, look, you got head and shoulders number one, head and shoulders number two. You've got this descending, you got this flag pattern, whatever you want to call it, right? Well, that's what I keep saying, whatever you want to call it, because people got tons of names for this shit. At the end of the day, bearish formation, that's what's important, okay? So you got the MACD cross, and then you've got the weekly head and shoulders on the RSI. So you count the factors, right? You've got one bullish scenario, which has one bullish factor, which is a double bottom, and those wicks at that bottom that we usually get. Or count the bearish factors, you got like what, 5 or 6 bearish factors here. So it's pretty clear when you be objective and consider both bullish and bearish factors, you got a lot more bearish factors here, and that's a fact. I don't care what anyone says. You can ignore the bearish factors, but we're not, okay? And so, taking this out to the weekly chart to look at some of these price targets, right? We said the head and shoulders was right around there. And then we talked about that descending or wedge, or not wedge, whatever pattern. You basically take the price target here. Okay, you can see that's going to coincide with the drop to 1250. Now, the head and shoulders price target, you're going to get a drop from here down to the break of the head and shoulders. Boom, right down to 1100, 1000 points-ish, okay? And so those are your two major price targets you're looking at right here is around 1250 to 1100. It is pretty probable based on all these factors I've just shown you, okay? Now, this makes a lot of sense, okay, because if we actually zoom out, and I know, most of these channels you probably watch, or most of you who do your own technical analysis, whatever, you guys only look at the daily chart. When was the last time you looked at a weekly or monthly chart, okay? We zoom out to the monthly chart, 1100 to 1250 is going to perfectly coincide with the previous high back in 2018 here in Ethereum, okay? So pretty much perfect on the dot, matches up with the perfect support here at 1000 to 1250. Kind of hard to tell exactly on this chart, right? So makes a ton of sense. We've had a huge rise, guys, and at the end of the day, if you're someone who bought here back in 2017, 2018, can you really complain? Not that much. At the end of the day, you're still sustaining bullish trajectory despite the shorter term bearish trajectory. And so those are the bearish factors I'm seeing. And that's exactly why you got a much higher chance and probability for a bearish breakdown here within the price of Ethereum. So I know a lot of these channels out there are totally injecting all this hopium into you, telling you Ethereum's going to go to 10,000, whatever. And you know what? That's true probably on a longer time perspective. I mean, look, you got a clear uptrend here, Look at this, right? I mean, there's no denying that, So, if you keep that uptrend up, well, even dropping down to 1,000, even dropping to 750, still maintaining bullish trajectory up to 10,000 someday. Okay, but I don't know if you're worried about someday or you worried about right now, and that choice is up to you. Okay, but I know as a trader, we are absolutely focused on the present. We are absolutely focused on what's happening now, and currently, you've got a whole lot more indications pointing to a downward move than you do upwards. So those are your bullish and bearish factors. Those are your price targets on Ethereum. You're looking at a bullish and best case scenario for Ethereum as is a rise to 3,200 on a break of this midpoint of about 2,400. And, otherwise it's looking pretty bloody. It's looking pretty ugly. You're looking at a drop to around 1,250 to 1,100 points on Ethereum. I do think that's going to be a beautiful buying opportunity if you're someone who likes Ethereum. But guys, remember, all this was done without the help of any fundamental analysis, without any news, and that's what most of you base your decisions on, is the news. And, guess who's controlling the news? The people who control the news are also the people who are controlling the price right now. So you're really just falling into the trap of what they want you to do. And that's why you have to learn how to read these institutional patterns, behaviors that we've kind of pointed out on this chart. So if you want to learn how to read these charts so you don't fall victim to the news, so you don't fall into other people's trap, make sure you go to crashtrading.com and enroll in our charts training, guys. That will be the most important and biggest step you can take if you're actually trying to trade profitably and consistently. And remember, guys, there's always going to be people saying stupid shit out there. So make sure you trust no man but yourself and the charts, guys. Like, example, Doge ain't going 11 cents. Keep dreaming. Yeah, right, genius. You wish. Keep dreaming, buddy. And, special place in hell for people that short Dogecoin. What you got to understand about people who say shit like this, guys, is they're the people who have no fucking clue what they're doing. And that's exactly why, guys, we block out the noise and we focus on the charts in this channel. We give you true, honest predictions and opinions, right? So in this video, I'm telling you, look, you got about a 70% chance for a major breakdown and probably about a 20 to a 30% chance for that bullish scenario. It's much less likely, and those are the facts, and these are the pivotal points we're looking at, right? So we go off of the charts, not off of people's opinions, not off of these people who have no fucking clue what they're doing, these kids who watch anime, in their mom's basement, right? You don't listen to other people. Focus on what you know. Focus on what you see, and you're going to do a lot better like that. So, guys, At the end of the day, I can tell you one thing. I definitely didn't go to hell for shorting Dogecoin. As a matter of fact, I went on a 3-week vacation, and that's why you'll see we haven't posted a video in the last 3 weeks on this channel, okay? So unlike these other channels you watch who are constantly pumping out 5 videos a day because that's how they get their money, that's how they get their revenue, is from pumping out videos and getting YouTube ads on their videos, right? We actually make money trading, okay? So if you want to start trading profitably, make sure you join our coaching program where you can actually work with me one-on-one. I obviously show you exactly when to get in, exactly when to get out, and most importantly, make sure that you don't freeze up out of fear and miss out on crashes like this one in Doge, this one in Ethereum, this one in Bitcoin. Guys, the opportunity's still here, okay, but you got to capitalize on it. Don't wait for everything to crash and then join, okay? Join before it crashes so you can actually capitalize and make the profits that you should be making on this crash and our analysis here, okay? So, guys, let's rock and roll. We got a lot to accomplish here in the second half of the year, guys. If you feel like the first half of the year hasn't been as good as you want it to be, you can change that now, and we can start trading together. So take advantage, guys. Limited spots here, so we only have 3 crypto spots right now. We are still accepting full capacity in options right now, and guys, options market has been phenomenal recently. It's heating up. It's been really nice lately, okay? So whether you want to trade options or crypto, that's up to you, but just keep in mind for crypto, we only have 3 spots, okay? So that being said, guys, my name is Alex. Thank you so much for watching. In the next video, we'll be breaking down Bitcoin, so don't miss it. Make sure you have your notification bell on. Make sure you're subscribed, and let me know if you have any comments or questions down below. Don't forget to drop a like, and we'll see you on the next video, guys. Let's rock and roll, and let's make this second half of the year great.